It's great to see everyone. For those I haven't met, my name is Michael Goldberg, and I'm our executive director for the Veale Institute for Entrepreneurship here at Case Western Reserve, and also run our Veale Institute for Entrepreneurship. I'm thrilled to welcome back to campus one of our alums, Zaydoon Munir. We met through, like everybody meets these days, through LinkedIn partly, and through a mutual friend and alum. I was made aware of Zaydoon and some wonderful things that he's done since leaving our university, where he has both an undergraduate degree and an MBA, and loved talking to him and was so thrilled to have him back getting him back involved in the family. And today speaker series that I hope will be the beginning of re-engagement in the school. And do look forward, Zaydoon, to having you back in Cleveland and on campus. I'll turn it over to Ishan, who will run the show. Many of you have been on speaker series before. We love these to be interactive. So Ishan will kind of run through a number of questions at first, and then we'll open it up. If you're watching on LinkedIn Live, welcome. And just put your questions in the comments on LinkedIn, and I'll be monitoring and make sure I feed those to Ishan. So with that, welcome, Zaydoon, and over to you, Ishan.
Thank you, Michael. Thank you for introducing Zaydoon. I just kickstart this off with asking you, Zaydoon, why don't you start introducing yourself, your experience at Case, and your career in fintech industry, as this podcast is going to be around innovation in finance.
Sure. I did join Case for undergrad. Again, my parents' hope was I was going to become a doctor, but as I started, and so I studied actually biomedical engineering. That was my major, but I just fell in love with computer science. I'm an immigrant, so at that point I just had landed in the U.S. and really fell in love with computer science. So beefed up my computer science coursework, and then also fell in love with economics, and then started taking economics classes. Then graduated, and was still a good son, and I applied to medical school, got accepted. But during that summer, I had major life trauma and figuring out, am I really going to be a doctor? And it took me until really day one, where I entered orientation, looked around and thought, no, I don't belong here. And so I walked out and went to the dean at Case and said, hey, here's my situation. I'm on a student visa. Medical school was my degree. And he's like, Zaydoon, you have a stellar record. Looks like you like economics and computer science. Would you want to do a master's in computer science or get an MBA? And I said, let's get an MBA. And so I enrolled in Weatherhead, but continued to focus kind of on technology. But actually during my business school, I also fell in love with marketing. So economics was undergrad, marketing was in the graduate work. And then when it was time to get a job, the majority of folks who had kind of similar backgrounds were going to the Andersons and all those things. And I just felt it was not for me. I had learned, I was developing in C++ at that time. And these factories were putting you to go learn COBOL, which would be a complete craziness for that time. And so I chose to work with a small technology firm in Cleveland that had really a specialty in advanced solutions. And so I built one of the first kind of skills matching capability for a youth employment agency, then built a toxic emissions monitoring and reporting to the EPA for one of the major oil companies that was headquartered in Cleveland. I think they may still be. They had a big giant building in downtown, and they may still have it or not. And then the last project was built the first interactive cooking line for Stouffer's Lean Cuisine mac and cheese. And so it was really all not kind of building accounting systems or anything, but all very innovative, including some telematics, because a lot of these things included something else, not just the software. So I was thriving, but then decided that it was time to move from building solutions that will deliver to something. When I felt I loved marketing, is there wasn't a right answer, and so I joined management consultancy. Because my background, what they saw Stouffer's and British Petroleum, they started to put me in oil and gas and manufacturing projects. And the locations I was going, I wasn't happy because I look at the assignment sheets and all my friends are flying. I see people flying to Hong Kong and Paris and London and New York. And I'm like, wait a minute, how are these people getting these assignments? And what I realized, they all work in financial services. So I made a big case to switch from manufacturing distribution to financial services purely because I just wanted one of those assignments to be able to be in these major cities. But it was the perfect time. This was mid-90s, and payments, electronic payments, was what today kind of distributed ledger is. It was the rage. And so my background was perfect for that work because I right away was able to lead major projects, both in the US. They actually had me go to Europe, and I did major work in the Netherlands, in France, in the United Arab Emirates, in the UK. And then that journey took me to then, this is 1998, and the internet was becoming an important element of the kind of top bank. So Bank of America was a leader in that space. And so I led, as part of the management consulting firm, a lot of the work, internet strategy work for them. And then that's when I woke up and thought, wait a minute, this is the future. So left consulting and joined, again, a company that was in the financial services, but in the technology space. We never called it, this is 1999, we never called it fintech, but it was financial technologies. And so worked with the first firm, and then had the opportunity to meet a couple of folks who were building the first online private bank. And so joined them as their CTO. And then there was a .com implosion. A lot of you are young, may not recall, but in the 2001, 2002. And then out of it, was recruited to turn around a struggling startup in the B2B credit space. And that work led me to joining Experian as the first ever global chief data officer. And that's actually when I think I kind of moved from a technologist to a data person. And that's really where I found my passion. And in it, I developed expertise in the credit space, which led me post leaving Experian, building RevolutionCredit. And then after RevolutionCredit, again, I always take a break. So I took a break, and then I'm starting something in the insurance space called Rainy Day Pal, which in my mind is a continuation of that work. It's the passion around building, using technology to build financial solutions to help America's mass middle.
Awesome, that's a great intro. So coming back to RevolutionCredit, and after you left Experian, you started RevolutionCredit. Since it's more into the fintech industry startup, I'd like to know more about what's RevolutionCredit, what it made an impact around the world, and how it's going from now.
Awesome. While I was at Experian, truly when I joined Experian, I was just another consumer, again, with a computer science, biomedical engineering, and MBA, who was just frustrated because my credit score would go up and go down completely illogically. And I actually, back then, you can search on the net, and I wanted to find the formula because I thought I can create the formula, build it at home so I could manage this important thing that everybody uses. And it was, you can't. And even while I was at Experian, no one can give you a formula that you could actually self-actualize so that you can build your own tool, and started to understand the limitations. Now, the system in the US is so, it's considered the most advanced credit system, yet it was not hard for somebody, and maybe because of the technology background makes me a bit idealistic, I right away thought there's something absolutely not right with this system. The most obvious one is what's now hot, which is data ownership. How is it that data that defines us is not owned by us, yet billions of dollars are being made on it? And then the attempts to correct it are, completely difficult. So that was one. But second is the limited scope. The credit score, has a 70% accuracy rate, which not many people know. And it shouldn't be like a surprise because it uses such a limited data set, which means in every year, 30% of people are being misscored. Actually, it's 60% because 30% would go up, 30% would go down. So if you want to be technically accurate, the credit score is 40% accurate and 30% is underscoring you, 30% overscoring you. Let's add that overscoring you because so that these people are getting the benefit. And so started this whole concept of alternative data. So I was one of the first champions to try to say let's to build a reputation, because it's a personal reputation. Credit score is part of your personal reputation. Let's add more data that allows consumers who don't have the major credit products to be able to do that. And so there was a whole lot of effort around financial inclusion, alternative data that we championed at Experian. But when the credit crisis of 2007, 2008 hit, and everybody, first you looked at the credit score, and really this was not a credit score issue, because if people know, these portfolios were scored when they were sold, but then there was no attachment, which is like in the new technologies, this distributed ledger DeFi should help significantly, because you could still create a linkage between what you're selling and the status of it. So because the data is not centralized and you don't have to kind of do a whole lot. So, but really at the heart of it was a whole lot of other stuff. But it took me on a quest to figure out, okay, we need to think differently about credit scores. And behavioral science was in its early days, and Daniel Kahneman was one of the thought leaders. And as I kind of learned it, I felt that there is a huge element of credit score which is future oriented, because today credit scores are purely backward looking. It's all the stuff that you did, it's incomplete. And even if it has errors, there's kind of, you're locked out of it. And so I thought the only way to break the logjam is to use something that's future oriented. And really intent, aptitude, and conscientiousness are three behavioral signals that one can use to orthogonally. And so I left Experian, spent the time, built the first model, and then we started to roll it out and test it. And the results were outstanding, because you allow consumers first to decide, hey, because it's instant, it's at the point of transaction. So you're applying for a credit card, a pop-up appears. Do you want to add this data? If you could say yes or no, and then it's you who agreeing to do it. So it's completely opt-in. Nothing that's being used is not without your knowledge, and you see how the scores are being accumulated. And so that journey, again, I was looking at a question around what it looks like I have a time period of 6 years. I spent 6 years with a management consulting firm. I spent 6 years with Experian, and I spent 7 years. And honestly, I was looking at it because you had a question of like, why? I'm like, I don't know, but there's a time clock in me that says 6 years, it's time to do something different. But during that process, we won several awards. I spoke around the globe. I mean, I was invited to Mexico, Argentina, Malaysia, Singapore, because at that time, it was truly revolutionary to use behavioral data and kind of make the case for forward-looking data as a way to arbitrate and modulate backward-looking data, which is at the core with the credit score.
Thank you. That's really insightful. It really feels interesting to me how behavioral sciences you incorporated for solving this problem in credit industry. So just kind of building upon that, like as you mentioned, you have like 6 years that you put it at one organization, and then you make transition. After having devoted like 7 years, you founded and you led RevolutionCredit as a successful company. You pivoted to founding another company, Veale, and this was, I guess, incorporated last year in December. So I was wondering, what motivated you to start this company, and how is it achieving different goals than RevolutionCredit in this finance space?
Yeah, so as I mentioned, really while I was at Experian, I developed a passion for building solutions to help what I call America's mass middle. And RevolutionCredit was the first step. When I left RevolutionCredit and I spent time thinking about, all right, what else can we do to make life better? And there was a statistic that haunted me even when I was at RevolutionCredit. I think the Federal Reserve started to do a study in 2013, if I'm not mistaken, and Bankrate does something similar, where they say 60% of Americans don't have $1,000 to pay for an emergency in a savings account. And when I started to look at it, so again, I was trying to solve a problem. I started to look at it, and there are a lot of similarities to kind of the issues of these people who are stuck in a 580 to 720 credit score. You're somewhere in between. The credit score actually is having a hard time figuring it out because it has a mix of positive and negative. But so looked at it and thought, one way to solve it is, there are people who are trying to solve it through savings. There are people who solve it through loans. And I felt actually an insurance spin would have a better chance, because when you look at credit scores, the number one contributor or driver of credit scores is something that people don't recognize. Actually, it's wealth. So wealth is the greatest equalizer in credit scoring, because what it is if you have wealth, when you encounter life emergencies, you have something to lean on to go through it. If you don't have wealth, you actually struggle. You max out your credit cards, you take on more debt. So you start to create these negative ripples. And so in that context, insurance actually plays as a wealth equalizer.
Thank you. I just have one more question, and I think we have a lot of audience questions coming up. So I can close this up and then open it for audience to have, who can jump up and ask any questions they have. So talking about, when we are in this Web 3.0 era, and we are seeing communications being thrown out for decentralized finance and DeFi and all that stuff. In your understanding and experience so far, what do you think about this decentralized finance industry, and where do you see it being realized in 5 or next 10 years? I see you talked in one of your interviews that you envision a day where credit file looks more like a LinkedIn profile, and not just some sort of DB file controlled by one person, one organization or someone. So just curious to know what your thoughts on DeFi, Web 3.0, and your thoughts on that.
Yeah, honestly, and I forgot when I did that interview, but it is one of those things where sometimes, and you see it, there are times when people come up with ideas because they want to solve a problem, and either the market is not ready or the technology is not ready. At that time, the technology wasn't ready, but in my mind, what Web 3.0 is really that vision, which is something as important as your credit file, because it's such an important part of your reputation. Today, credit reports and scores drive most decisions, insurance, utilities, you name it. And so I was just shocked at how is it that there are more than one version of the truth. Actually, the number one thing that bothered me the most is there are 3 entities, the 3 credit bureaus and multiple others, and everybody may have slightly different view of who you are. That the truth from a data perspective should be singular. And so while it feels like it's centralized, I'm not saying it should be centralized. I'm saying there should be one version. Blockchain distributed ledger is actually that solution, where this data, there is only one version of the truth, not 3 companies. Experian has one view, TU has one view, and Equifax has one view. But that was way before. But it is one of those things where the solution sounded obvious, but the technology wasn't there. For me, Web 3.0 is a dream, because I think there are 3 things that it is at the heart of it, which is decentralization, to take away, and decentralization not in the sense that because right now you can't say that it's just Experian. Like, I don't consider Experian or TU or Equifax as centralization. I think they're just large scale entities. But I think the 3 things that get me excited is privacy and data ownership. The decentralization is a vehicle to achieve security and data ownership. But as a data person, I think data ownership, monetization rights, and privacy are really what gets me really excited about Web 3.0.
Thank you. That's really insightful. Now I'm going to open this for audience, so anybody could jump in. I see Mitchell had one question, and then Scott, I invite you to go ahead.
I guess I'll go real quick. everybody. This is really interesting. Zaydoon, I was curious. So at the moment, is essentially Revolution the main provider of this kind of behavioral and analytic technique, or are you guys working with other larger central banks and credit bureaus, or are they developing their own techniques? Is this, I mean, to me, this seems pretty instrumental to helping really, like you said, move our middle class and pretty much anyone who uses credit more so than, you know, wealthier individuals. And I'm just curious to see if you've run into other competitors or you're working with other people to develop the product further, or just kind of what the next steps are for this journey.
So I left RevolutionCredit in 2019, right before the pandemic. At that time, the top 10 card issuers, the major banks, the major retailers who had card products where the customers, and of course, clearly we started kind of, we cut our teeth with the online lenders. A lot of the online lenders were instrumental really for our growth, because they're a smaller organization, they're highly competitive, they can deploy technology much quicker. So if you want to just change kind of the credit card application process or the collections process or any of these processes where you can inject that, where you can actually input the RevolutionCredit API. Since then, I think it's now the company rebranded. It's part of a different company. It's called Scorenomics.
Gotcha. Thank you.
Hey there. Thank you so much. Excuse me. Yeah, great talk. Really, really interesting, fresh perspective on everything. Just kind of two main kind of quick questions about RevolutionCredit and how the company functions. First, you mentioned kind of behavioral variables that kind of give you a competitive advantage over the traditional form of the credit score. And I understand if some of this is proprietary knowledge, so just maybe share as much as you can about the nature of those variables and how you obtain those variables. Yeah, just from a practical data implementation, how do you get the data to do the modeling?
How we did it at RevolutionCredit is we designed what we call 1-minute credit clinics. So these are 1-minute financial education looking like highly interactive puzzles and exercises that are behavioral science based, that as you do them, we use it to measure the 3 signals that we intended on. And look, there could be more signals, but we focused our effort to simplify it on these 3.
So the idea is that kind of within the API, the applicant for the loan would complete these exercises, and then based on those exercises, you gain some kind of insight into their personality or their, you know, biopsychosocial habits or something that you can then use to make a more educated lending decision.
Yeah, not psychometrics. I don't believe in psychometrics. I believe, so behaviors are things that you can improve, that you can build on. And so I did not want to use things that are, psychometrics don't change. And so it would be accusatory to use something that you are born with versus something that, because people of all kinds of psychologies can become leaders, and we've got tons of examples of. So behavior is something that is universal. That if I want more aptitude, because aptitude is one element, and so if I need to learn more, just keep doing, and there's no failure. So once you choose to do it, the promise that we make to consumers is no one should be declined based on this. So the number one, every institution we work with, my requirement in the contract, they can never use this data to decline somebody. Number one. Number two, there's no failure. The only failure is the consumer saying, I choose to stop. I don't want to do it anymore. I'll go with the decision that you had offered me in the beginning.
Okay, that's helpful. And so if the lenders are contractually obligated not to decline somebody based on your data, how do you kind of agree to partner with them and get revenue from them? I'm assuming that they're paying you a fee for using this API, right? Because as a lender, I would imagine the lender would say, oh, I want to use this to reduce my risk and reject all the people that aren't going to pay their loans, right? So how do you get the lenders to agree to partner with you then? Yeah,
so I go back, look, when a credit score has 40% accuracy, and let's say even today, because look, even AI, I'm sorry, but I couldn't get excited about AI still until I think distributed ledger becomes the only mechanism, because every AR model that anybody is building is using a set of data that is still incomplete about that consumer. And so the amount of teaching, so you could expand that 40%. If a credit score is accurate 40%, you have, and 30% are being underscored, there's an opportunity for that bank up to 30% of people that they otherwise would have declined, they could approve. So actually it's a highly net positive. So once they see it, they actually, that question comes up, but how? And I go, you have, like, we are competing with your model. Your model would offer a decision. We offer a decision on top of it, not against it, on top of it for those 30% that you'd otherwise decline.
That's helpful. And then just, sorry, one more question too. When you're developing the model to validate it, what did you compare it to as far as the ground truth? Did you have future data from certain people that you would kind of train the model on, or how did you validate the model to begin with?
When I launched it first, the first large pilot with one of the largest P2P lenders still in existence, because I knew the founder and he is one of the most impressive fintech entrepreneurs. His name will live on forever, like the things that he continues to do. I just had to literally, we had to like sit, there was a team of 4 of us. We launched it and we kind of sat and waited for 6 months because you don't know. It was like, you have to do it head to head. And then the 6-month data came back and it was all positive. And they're like, time out, we need another 6 months. So we like, and so for the first 2 years, this is what we did. We'd launched these large scale, they're all large scale because you don't want to do it with 1,000 people. You want to do it with 20, 50, and you wait because again, historical data is out of context.
Yeah, that makes sense. Thank you very much.
Marcus, if you have a question, go ahead and ask her.
Sure, thank you. I was curious to hear maybe your thoughts on how your work might intersect with how credit is provided to small business owners. Oftentimes, when small business owners are first and entrepreneurs are first starting out, their personal credit is one of the main factors that comes into consideration. So often, you know, sometimes small business owners need coaching on that to understand how important that is. So I'd be curious to hear your thoughts on how your work has impacted, you know, the credit lending to small business owners.
Awesome question. So while I was at Experian, undertook because it was something that one of the chief risk officers had a very similar thought. Does they do? You know, we have a small business offering, and what do you think? And so we did this study where we looked at consumer credit and small business, and for business owners, the two are interlinked because we end up using our credit cards, we use our home equity, we use all those things in the early days to fund it, and so the relationship is completely the same. And so I totally agree with you that helping small business owners, you help them with personal finance management as a step. Then when we were working with this large, that started out as a P2P lender. So there are 2 brands that started as P2P lenders. We kept doing work with one of them, the largest one. They knew, they actually can see that many of these larger installment loans that people are applying are really by small business owners. You know, they're applying as a consumer, but at the end of the day, if you just, you know, do a big data search, you could find that they have this business. And so in essence, it was working in the same way.
Thank you.
Looks like Shraddha also has a question, and it turns back to Web 3.2, and you're talking about that. So her question is, if you had to pick decentralization system, where else do you think it would be helpful and efficient apart from banks, as cryptocurrency is already using decentralization concept?
So I am not good at making predictions. That was never one of my strong suits, and I'll just be honest. So in my mind, again, as a data person, anywhere where there's an opportunity to create significant value because today's data is fragmented. That in my mind, because when it's fragmented, there's a lot of computing effort has to happen to try to build a single picture of the truth. And so cryptocurrency would, like, as I'll be honest, it wouldn't have been in my mind as one of the first to actually leverage it to great commercial success. And great commercial success, look, let's be honest. If you look at the market capitalization of cryptocurrencies, it stayed like at $500 million, $500 million, $500 million, $500 million, $500 million from like 2000, whatever. And then in 2018, there was a bump. And then sometime during the pandemic, it just shot out. And so as I said, I'm not a good predictor. But for instance, I think consumer finance in general, where there should be a single version of the truth, and it shouldn't take, like, if the effort today to actually assemble a complete picture is a major computing effort, then that's obvious.
Thank you. That was really helpful. I hope Shraddha found her answer. Michael, do you have a question? You can go ahead.
I do.
Ask it.
Every once in a while, Zaydoon, the students let me ask a question, which is nice. So it's so great having you here today, and just your own arc. It was fun. I was sitting with an alum yesterday having lunch, and he was asking me about our new Veale Institute for Entrepreneurship and how we might measure success. And without actually even using you as example, I was sort of talking about the kind of alum that's exactly like you, someone that graduates, someone that then goes into more, it's called traditional consulting jobs, banking jobs, but has that inkling to want to do something and start something. And then, in your case, obviously it took, was it 20 years after you graduated from Case to launch a business. If you could sort of—
I started Case when I was 12.
It's amazing. Our youngest student. What advice would you have for me and us kind of at the university as we think about, because I mean, the path that you took is actually not so atypical, I think, for many of our students. And there's a number of reasons, whether it was you, going and getting experience in industry before starting something. I mean, we have very few students that go start something right out of the university. What advice do you have for your alma mater and people like me working there? Like, how can we provide the support necessary and give folks the tools so that at some point in the future, whether it's right after the university or kind of later, that they might kind of embark on this entrepreneurial journey?
Excellent question. And again, I hadn't prepared for it, but let me say a few things. I think one thing that I am seeing, which may provide a view into it, which is, I think, funding. And so because Silicon Valley and New York are kind of an ecosystem of their own, I believe one way to drive is, and again, these don't have to be large checks, but building accelerators, incubators, and I like them more accelerators than incubators because I think it just changes the nature. But where you can build accelerators that provide initial funding, and it could be as simple as 50,000 or 100,000. That, in my mind, because I go back and I say wealth is the greatest equalizer. Again, as somebody who came to this country, became a citizen, and then was an experiment and felt kind of started to understand kind of what's happening in society. I believe because the people who graduate, and I remember all the people who are around me, they're some of the smartest people I have met in my life, some of the smartest technologists. And so it isn't that more entrepreneurs, they're smarter. I think either they end up gravitating to going to the two coasts where the funding opportunities are more significant. And so anything that the city plus the university can start to sponsor in terms of accelerators would be hugely helpful.
Cool. Looks like we are done with all the audience questions. So thank you very much, Zaydoon, for taking time to talk with us and answering all the audience questions. I'm really appreciate it. And I'll hand it over back to Michael.
Great. Well, thanks, Ishan. And as I mentioned, I got to spend the last part of last week with Ishan and 12 students out in San Francisco, and it was fun watching. And actually, it was a very global group, including Ishan, who's from India, and students from all over the world and the country, as getting a little bit of a taste of what's happening in Silicon Valley. It's interesting, Zaydoon, that you also mentioned access to capital. But we could follow up offline later. We're putting together right now a new alumni fund effort, actually, to try to invest in alumni founders and things coming out of the university. Because I agree with you. I think access to capital is critically important to help folks along the journey. So thank you for taking the time to come back. We do look forward to welcoming you back to Cleveland and to Case at some point now that we're all traveling again. For those that are watching, please do check our schedule. We have a number of upcoming events that we'd love to see you at. So I hope everybody has a wonderful day. And Zaydoon, thank you again for taking the time.
Thank you, guys. It's been a pleasure, and I am committed to re-engaging with the wonderful institution that truly kind of helped push me to where I am.
Awesome. Great to see everybody. Have a wonderful day.